You know, there's an old saying, when the going gets tough, the tough get going. Hey guys, welcome back. For about the last month, my wife and I collectively, in our respective TFSA portfolios, are down about 5%. And given the amount that we have in there, it's a substantial amount of money. But we're not overly worried. And in this video, I'm going to talk to you about what it is that we're doing to navigate these turbulent times. I'd be interested from you to hear in the comments below what it is that you're doing, because over the last little while, there have been very, very few green days and a lot of red. Stick around and we'll chat. One of the things you'll often hear people say or give out as advice is diversification. And what they mean by that is the market is often very cyclical, and certain segments or certain sectors of the market may perform poorly while others perform well. And that constantly changes throughout the year and over the course of several different years. So if you're well diversified into different sectors, when one sector is struggling, others may pick up the slack for you and keep your portfolio at a decent level. The problem with that is that sometimes all sectors go into the tank and all sectors are in the red. And that's currently what we're in right now over the last month, as I said. So, to give the answer of what we're doing within our portfolio, excuse my language, but not a damn thing. If you're truly invested in the companies and you truly believe in those companies, and there's been no substantial change in the business, or there's been no news that has come out, there's really no reason for you to go back on the investments that you started and start to doubt yourself. Keep that confidence. This is not a reflection of the company. This is the market that we're in. High interest rates constantly rising, and this was the latest kick in the pants that we all received. Those are the sorts of things. Inflation still being considerably higher than usual or normal. These are the things that are contributing to this market right now. And one of the worst things people can do is get scared, because technically, when you sell, you lose. Until you sell, you never ever lose money. So if you're confident in the investments that you're in, there's no need to sell. To the contrary, this is a great time to buy. Let me show you what I'm talking about. On the screen here is an often discussed company that my wife and I are both invested in, and I've done a segment on Northwest Healthcare properties in the past. And if you look at the chart here in front of you, this is from Yahoo Finance. 6 months ago, Northwest Healthcare was trading just over $10. It closed on Friday's close at $6.39. Now, that last little dip there in that last day of last week, or the last couple of days of the last week, there was some news about a joint venture that was planned and expected that fell through and didn't happen. At that point, it was still trading quite a bit lower than usual. And of course, that news dropped it even further. This is currently offering a 12.5% dividend yield. And there's been a lot of discussion over this dividend getting cut. Now, I have no idea what's going to happen, but I do know, and I've made comments about this on my previous videos and in some conversations, that the majority, almost all of these agreements that Northwest has with their tenants are long-term leases, and they're indexed to inflation. So the current interest rates are certainly hurting their expenses, which they have a fair bit of, but their income coming in is not in any jeopardy whatsoever. So will there be a dividend cut? Excuse me. We have no idea, but the income is all but guaranteed. I thought I read in the neighborhood of 95% or 97% occupancy, and those contracts being guaranteed. So our average on this stock is over $10 or $11, I think. So it's almost half, just over half of what we have as our average cost. So this is a great opportunity, if you truly believe in this stock, to get some more and lower your average cost. So if I can circle back now to what I was talking about earlier with diversification, I'll show you the combination of all of the funds that my wife and I are in, all of the stocks combined. And the two charts that I've got up on the screen here, the one on the left breaks down all of our holdings by sector. And then on the right, that chart shows all of our holdings by industry within the various sectors. So you can see we have our largest percentage within our portfolio is in industrials. with the second largest, almost a tie there between utilities. We have a lot of utilities, but we're also heavily invested in financials. And I was just talking about Northwest Healthcare. You can see our real estate portion of our holdings is only at 6.57%. So now this is all based on market value, mind you, and with Northwest being, as I said, just over half of what we bought at, if it was at regular trading prices, that percentage would be, a fair bit higher. Not certainly not doubled per se, given our total of all of our funds in there, but it would certainly be a little bit higher. So what this tells me, again, getting back to what we're at right now with where the market is and where the pricings are, that tells me that we could get a little bit more into a little bit more Northwest if we truly believe in the stock. And that's the thing that I'm pushing in this video is look at your stocks and how satisfied you are with them, but also then look at your diversification and the breakdown of what it is that you're into. And as I said, I've got it here by sectors. So really real estate, consumer, cyclical, and communications are the three that are kind of lagging. You may notice on here as well, I don't have any energy stocks currently. I did, and I got out of them and bought into other things. So I could certainly get into energy. And in the past, I was talking about getting into Canadian natural resources. So that might be an opportunity there. And then over on the right, again, that larger diversification within the actual industries themselves. So it's all broken out there. So certainly something to keep track of the different sectors and industries that you're in. And when we get into the times like we're in right now, this is a great opportunity to lower your average costs and or get into different sectors or industries that you may not be into yet. So that's going to wrap it up for this segment. I hope you've enjoyed it. Again, this has not been investing advice, just talking to you about what my wife and I do within our portfolio and in the current times that we're in that are a little bit challenging, what it is that we're doing. As always, I'd ask if you've enjoyed this video, please consider hitting that like button. And if you click that little Marxie's Place link, you can subscribe as well. Take care, and we'll talk to you soon.